Results out from Sun International this morning show 1% fall in revenue for the year to June to 6.2 billion rand, while adjusted headline earnings per share fell 18%. Now, despite the fall in profits, the hotel and casino group has reinstated its full-year dividend, declaring a payout of 100 cents a share. Earlier, I spoke to CEO David Coutts-Trotter.
I think if you look at the reasons why we suspended the dividend payments kind of 3.5 years ago, so in other words, a year and a half of without paying dividends, it was really to do with the economic outlook at the time, trading prospects, to do with the dramatic tightening in bank credit, balance sheet structure, etc. I think now 18 months later, we are more confident on the outlook, which is not to say that we are hugely optimistic about the outlook, but we do think that things have stabilized. So from a cash flow point of view, we see stable and slightly growing cash flows going forward, and certainly our balance sheet is in better shape.
And do you think you'll be able to keep paying these dividends going forward? Because the outlook does remain a little bit cloudy. We've been chatting to a number of CEOs in the studio, and they're all a little bit uncertain of what lies ahead, particularly if there is a double-dip recession in the United States.
Yeah, I think we are fully aware that there remains some uncertainty, but if you look, a lot of our cash flows are really driven out of local consumer spend through the casinos, and I think there we've definitely seen some stabilizing. We've had 3 years of declining revenues. We think that at this point, looking forward, revenues will be fairly stable.
Well, let's just take a look at the period under review, because hotel room revenue down 5%, occupancy is weaker at 67%. Is this disappointing given that the World Cup fell right at the end of your reporting period?
Look, the World Cup, was never going to have a big impact on us. I think we'd said that, to media analysts, etc. So there was no big expectation World Cup from our perspective. We've made brief comment on it. It probably fell short even of that expectation, but it really wasn't going to make an overall big difference in our total results.
Now, a good part of your financial year fell over the course of the recession that we saw last year. Where did you feel it most in your business? Was it casinos? Was it hotel rooms?
In both. As I said, the casinos, though, have been, there's been big pressure on those revenues, probably now for getting towards 3 years as we sit there now. The hotel's been much more over the last 18 months or so, but it's affected both sides of the business, no question.
Now, having said that, your gaming revenue held up at 6.2 billion rand, getting customers through the doors, but it looks like they may be spending a little bit less, or is it just that they're losing less?
Well, held up because we've got a new unit in there, If you strip out the new unit, they didn't hold up. They were actually, in South Africa, gaming revenues were down year on year.
A little bit, sorry, continue.
But it's tended to be a pattern of similar numbers of people spending less rather than less people, yes.
Mm-hmm. Increased operating costs, and that's put slight pressure on your EBITDA margin, down to 32%. Are you handling those costs going forward? Is this something you're going to focus on managing in the year ahead?
Well, it's very difficult. If I was to kind of estimate, I don't. And let's take, say, 2006, 2007, say as a base year. In real terms, I don't think revenue-wise we'll be back to 2007 levels before 2014-15. So if you look at it from that perspective, that period from 2007-8 through till then is going to be hugely difficult from a costs perspective. Costs will continue to escalate, particularly energy costs, property rates and taxes, and that has put a lot of pressure on margins, particularly over the last 12 months. For the first couple of years, we did quite a lot on the cost side. There's only so much you can do. So it has put pressure on our margins, unfortunately. We are doing everything we can to make sure we're as efficient as possible, and also try and manage those costs. So, I mentioned unit energy costs have escalated dramatically. All you can do is to try and consume less units, and certainly we're doing everything we can to achieve that.
Well, David, let's touch on the rand perhaps, because you had a net foreign exchange loss of 15 million rand compared to a 42 million rand gain last year. Of course, the rand has been particularly strong. You also have to contend with the Chilean peso. But just looking at how the rand affects you, because obviously with foreign visitors coming to this country, as the rand strengthens, it does make your rooms a little bit more expensive for them.
Indeed, yes. The Forex line is really to do with cash balances and isn't a big issue for us, and you're absolutely right. More important than its impact on our cash balances, the impact on our international customers. And it does make it a little bit more expensive, and it makes it even more difficult to achieve any kind of rate increase, given that you already have an increase coming out of the relatively strong currency. So that has been an additional factor on room rates.
David, just looking at the period ahead, just on the prospects for this year, and also Grand West Casino, because of course your initial exclusivity expires at the end of this year. When are you going to know whether you're going to have that license renewed? What are the prospects for 2011?
Firstly, just on the Grand West, so it's not the license that expires. The license is indefinite. It's really the exclusivity around the license. I think the way forward will probably become clear, over the next 12 months. I don't think there's going to be any very immediate decision from the indications we've had from provincial governments. So, I'd suggest over the next year that situation will probably clarify. As far as prospects go, as I said earlier, I think casinos, the revenues have definitely stabilized, and we are beginning to see some minor growth. So, I think we believe that we should be able to grow the casino revenues year on year. I think on the hospitality side it'll be more difficult to show any significant growth over the next 12 months, and I think that's going to remain probably tougher for a little longer. But Chile, with a hopefully first full year of trading of all the facilities
without earthquakes,
or anything else, should make a nice difference to our results. So whilst I think it's going to be still a fairly difficult year ahead. Touch wood, it's going to be nothing like the year that's just passed us, and with some slightly more positive results we're predicting.